welcome to beautiful Las Vegas, Nevada. Our EO Las Vegas chapter would like to welcome everyone here in the audience and everyone on Zoom. Thank you for taking the time out of your very busy schedules to be with us for this absolutely incredible learning event. Crap happens, man. The intersection of law and insurance. We couldn't have two more qualified, educated, and seasoned experts on our panel today. And so I'd just like to share a little bit about each of them. And so you know exactly the powerhouses that we have with us today. First and foremost, we want to thank our strategic partners. Jordan from Westpac, thank you for being here. Thank you for always supporting our chapter. We're so grateful. And we couldn't do what we do if it wasn't for our sponsors such as you. So thank you so much. I'm going to put my glasses on because I'm showing my age. Here we go. So Uliana Chung, she is a successful owner of the State Farm Insurance Agent, was a federal law enforcement officer for 6 years. She was with the U.S. Customs Service for 4 years and a federal air marshal for 2. During her time in federal law enforcement, she was accepted into the Federal Leadership Program, received 2 Custom Commissioners Awards and numerous Expert Shooter Awards. She is original from Southern California and a proud
Bruin, right?
Bruin, absolutely.
And Raiders fan.
She has been married for over 17 years and is the mother of 2 very, very rowdy boys. She volunteers with several nonprofit organizations and serves on numerous boards. She is also serving as a council member on the Division of Insurance Commissioners Agent Advisory Council. Thank you. Here's Uli. We love her.
Thank you, guys. Thank you.
And this is Jordan Flake. We're so happy to have you here with us. Jordan is a managing partner of Confidence Legal Attorneys at Law. Mr. Flake graduated from the University of Michigan, a top 10 law school, in December of 2006 and became licensed to practice law in Nevada in October of 2007. Since law school, Mr. Flake has practiced extensively in the areas of estate planning, probate, trust administration, and personal injury. Practicing law in these fields have required Mr. Flake to argue matters before the Clark County District Court and the Federal District Court of Nevada. He enjoys public speaking, marketing, and has presented numerous seminars on estate planning, probate, real estate law, and other legal topics. Mr. Flake is a City of Henderson appointee, serving as Vice Chair of the Senior Citizens Advisory Commission. We'd like to welcome again our panels, and we're so looking forward to this. Thank you.
Well, clap for Jordan, right? Thank you all for coming. As former forum mates, we, during experience shares and just being friends, we would talk about how our 2 professions intersected. We would talk about cases, we'd talk about, pick each other's brain, and we thought this would be an amazing and hopefully interesting presentation for our fellow entrepreneurs. As we were getting ready to do this, Jordan's assistant was helping us, and her one, comment was that we needed to color coordinate. And I told her, it's not like Jordan and I are going to prom, right? Whereas Jordan said, I look good in blue, so we should wear blue. So doesn't he look handsome? Right. And so thank you, Connie, for that amazing introduction. My name is Juliana Chung. I own Chung Insurance Agency. Since you're going to hear all about my insurance background and some insurance stories, I thought I would share something from my past when I was in federal law enforcement. I was an air marshal. And when you're an air marshal, you're undercover on the plane, and you have to have a cover story. You can't be like, I'm the air marshal. You have to, if people ask you what you do, what's your cover story? So my cover story always was that I was a grad student at UNLV, and I was going to visit other girlfriends who were grad students wherever I was visiting, right? And so one day, I get on this plane, and the hottest guy sits next to me, and we're talking and flirting, and towards the end of the flight, he's like, hey, if you're going to be in town for a couple days, can I get your number? Can I call you? And at this time, my husband and I just started seeing each other. It was way too soon to have any conversation about exclusiveness or anything like that. And again, this guy was really hot, right? So I'm like, sure, here's my number, because I was flying that route quite a bit at the time. So I'm like, here, call me. And so, the plane ride ends, and he leaves. I end up meeting up with my partner who was on the plane, but we act like we don't know each other, right? And we do our closing, procedures that we need to do on the plane. And as we get off the plane now, the hot guy was waiting for me. He wanted to make sure my girlfriends met me and that I was okay and that I had a ride, right? And now all of a sudden he sees me with this huge, buff, bald guy, right? And you could see like the look on his face, like, what is your story, right? And so the minute I leave the airport, my cell phone's ringing, and it's him. And he's like, seriously, what's your story? Like, what was that all about, right? And so I explained to him, I'm the air marshal on the plane, and, blah, 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 blah. And he goes, thank goodness, because when you told me you were from Vegas and I saw you with that guy, I started worrying, like, that you were a prostitute and that he was your pimp, right? So needless to say, we did not go on that date after he called me a prostitute. And my husband and I have been married almost 18 years and have 2 beautiful boys. So,
All right. That's great. My name is Jordan Flake. My law firm's called Confidence Legal Attorneys at Law, and that's because my last name, Flake, doesn't exactly inspire a ton of confidence. I actually have 2 brothers in Las Vegas who are also lawyers, and we thought about starting the law firm Flake, Flake, and Flake, but that's just not going to work for us. They actually went to the same law school I did. I appreciate that you put in there that it was a top 10 law school, because I hate having to put that into conversation, 20 times a day like I already have to, So, it's the University of Michigan. It's extremely cold there. There's times walking across campus where I thought I was going to die from the cold. And if you've been out there, you will understand the famous lawyer joke that they say in Michigan. I appreciate courtesy laughter, by the way, but they say it gets so cold in Michigan that you can actually see an attorney with his hands in his own pockets. So anyway, that's kind of what you worry about with attorneys, and I'm really excited for this presentation.
It's not actually, I'm sorry, it's not going.
Yeah, can we get, we'll get some
Tech support.
tech support. We're having an issue with the clicker up here, but that's okay, because
Yeah, we'll just move on. But
we'll move on, but in the
figure it
meantime,
out.
if you guys want to figure that out. So the presentation is called Crap Happens, and basically the idea is Yuli and I are both in practice areas, professional areas, there we go, where we need to be super concerned that something can happen to our clients that would fall on them like really hard, like a car accident or a death or something that could wipe out their entire finances, something that could totally subvert their wishes. These are extremely harsh outcomes that both Yuli and I have to, when we sit down with our clients, have to plan for these things. And so that's really the heart of both of our professions. And so one major area of overlap is that we are always pleading with our clients and our potential clients to do their planning while the skies are sunny and clear, because that is the time to sit there and review what's going on and make sure that you're set up properly with insurance and with your legal planning to mitigate and control as much as possible the consequences of the different things that happen in life. So, we have, these are pretty self-explanatory, but life is extremely dangerous. Just today, I was driving around with my 16-year-old son. I'm teaching him to drive. He takes his driver's test this Friday, and I can't believe, because it just seems like last month I was like telling him nursery rhymes as he goes to bed, and now he's behind the wheel of a Chevy Silverado, and he has the ability to, potentially take a life with his lack of experience of driving. Or every time we take the wheel, we have to worry about some other 16-year-old out there on the road, So these are really harsh things that can happen, and that contributes, of course, to the fact that life is extremely unpredictable. We don't know, for example, if we have a business and we hire somebody to drive a truck for us, and they show up to work with meth in their system, and they take the life of 5 bikers, and that's something that happened this last December. And we have a client who's been victimized by that particular accident. But these horrible things happen, and even if you manage to avoid the dangerous things in life and the unpredictable things in life, even if somehow you get lucky and you skate through your whole life without any of those events happening, you still have to deal with the inevitability of you passing away at some point in the future. So both of our practice areas encourage our people to plan while the skies are sunny and clear. The purpose of this presentation is so hopefully that we can say something that'll make you ask a question in your mind. I mean, it's a pretty broad general overview, but we hope that you ask yourself serious questions about where you might have gaps or where what you think you have might not be enough. so that you can schedule an appointment with some sort of professional, legal professional, insurance professional, and close those gaps and make sure that you're not like unprepared when the crap happens. So, really essential to our concept of how our industries overlap is the idea of liability. And liability is really fascinating because it's pretty obvious it's the state of being responsible. And our society just kind of got together over the last tens of thousands of years, and we kind of collectively decided, okay, who's responsible for what and when? And when somebody's responsible for causing harm, we pin that person with the cost of whatever harm they caused. And so that's the concept of liability. And it's not always an easy thing to understand. I know, for example, I am privileged to have my son Wesley here listening to the presentation. You're 12 or something like that, right? So my kids all the time, I got 4 boys and 1 little girl, like, so I got 5 kids, and they're always fighting, and they're asking for me and their mom to like sit there and determine who's liable in these different situations, and they want us to parse it out. And I'm like, no, I'm not going to do that. I do that for a living. I'll tell you what, if you will pay me $350 an hour, then I will sit here and I will listen to all the facts and we'll make a determination of liability. But that's why lawyers have businesses, because it's really hard to tell who's liable in what situations. That's also why people have insurance, as Yuli will explain, is because you might find yourself liable and you don't know for what and for how much and under what circumstances and who and where and when and all those things, and it can be really scary. So,
from an insurance point of view with liability, like Jordan was saying, the crap, the inevitable, the dangerous. What an insurance company does is basically take the risk that you're not willing to take, right? So if you want us to take more of the risk, you have to pay more in your premiums. If you're saying, hey, I will self-insure in a sense, right? Like, I'll take that risk, then you are understanding that you're doing that, right? Also, from an insurance point of view, so I found out today that this stage that we're on, Tiffany just performed on it. And so I was joking around that I would be like laughing and dancing on the stage right now, singing for you guys. But let's say I was dancing and I was like moving around and I flung my hand and I hit Jordan in the face and I gave him a bloody nose. Technically, I would be liable, right? He might have some medical bills and all of that. He's hurt, right? And so, but that was an accident because of my amazing dancing. Somehow I hit him, right? Versus Jordan just pissed me off, right? And I'm like, you know what, dude, screw you, and I sock him in the face, right? That was an intentional. So for both of those scenarios, you're both liable, right? I'm both liable for those. I still caused Jordan harm. But from an insurance point of view, the second would not be covered. It's because it was purposeful, right? So for entrepreneurs, the things that I noticed the most are obviously personal liability, how insurance affects us personally, and how liability affects us in our business and our profession. So on personal, there are 3 different major categories. It's the auto insurance liability, the home insurance, and then the personal umbrella. So for the home, for the auto, right? Again, the thing that I notice a lot with my high net worth clients sometimes is that they are not properly insured. And so what I mean by that is if I'm a poor college student and I have like not even 2 pennies to, rub together, if they hit me, who cares if I hire Jordan and sue them, right? What do they have? They have no assets, right? The people that are in this room, the people that are on Zoom, entrepreneurs, you guys have assets. And so again, knock on wood, let's say you hit me and I'm really, really hurt and I hired Jordan and his law firm to come after you. I always tell my clients the insurance company's money is easy. If we win that judgment of $1 million against you, we're going to pay it. That was our obligation to you. That was the contract that we signed, the risk that we took on from you, right? But if I win $3 million against you, the insurance company is going to pay $1 million, and then you're responsible for the other $2 million. And so, I'm using big numbers, but I've had clients who are multi-millionaires, and they have the state minimum liability, which is $25,000 per person.
Let me jump in there for a second too, just to explain. Like, you never know who you're going to hit. So if you hit somebody who is a high-level cardiologist, surgeon, who works with their hands all the time, and you hit them while they're on their bike or whatever, your minimums may not be enough to cover their lost income because they can no longer go out and earn the millions of dollars a year that they earn. So you never know who you're going to hit. You also don't know who is going to hit you. You want the cardiologist to hit you. But the reality is the person who hit you may have stolen that car and you might not have any insurance coverage on their side. So this is a serious conversation to have with Yuli, like, how do I protect against the risk that the person who hits me is some kid who just stole a car and who's on like a crazy joyride, you know? So those are the types of questions that you would want to think about.
Thank you. And also, you know, I was saying in terms of liability, it has to be accidental. So for example, I had a client who accidentally put her car in the wrong gear and the car rolled over her boyfriend and he was hurt, and that covered because it was accidental. On the flip side, I've had a customer who found out her boyfriend was cheating on her, and she found out because she got an STD, and she was like, she told the claims person, she was like, that, you know, colorful language, you know, person did this, and I purposely ran him over. That was not covered. So none of his injuries, she was liable for that herself, right? So again, it has to be accidental, right? So again, if you do something purposely, just be like, I didn't mean to do it.
Yeah.
So,
Admit nothing. That's your free legal advice for the evening.
The other one is home insurance liability. So home, I could go over to Connie's home and I trip and fall, and again, liability that would extend over from the home. But home also covers things that you might not know. So for example, her dog bites me, right? That could be covered. Also, a bunch of us, you know, entrepreneurs, we like to go and do things like rent boats, rent ATVs, you know, jet skis. Again, your homeowner's liability will extend over. That scenario I give where I was dancing and I smacked Jordan in the face and he got a, you know, bloody nose, I broke his nose, your homeowner's insurance could extend to that. Again, as long as it wasn't like purposeful, because he pissed me off, right? So, yeah. And a good example, just recently in Miami, my family and I rented Segways and we went kind of crazy with them. So again, if I hit and ran over somebody in a Segway, that would have been homeowner's policy. Okay. So now the other one is the personal umbrella policy. So it literally is what I call the umbrella that the other policies go under. So it doesn't give you additional coverages. What it does is it extends the coverage that you have. So most personal home and auto liability insurance go to $1 million in liability, right? But you could be worth 10, 20 million and you want an umbrella that's even bigger than that. So you have an underlying coverage from your auto and your home policy, and then the umbrella goes on top of it. So that's where, again, a lot of my clients, you know, they do have some high net worth, and they, again, if you understand it, it's the risk that you're willing to take. You know, I'm a good driver. I don't think that's going to happen. Probably not, but you never know.
So one of the questions I had on that one is just like, for me, the concept of umbrella seemed to make it wider in terms of what it covers, because that's what an umbrella does. It protects you from the rain and makes it wider, but that's maybe a wrong image to have in my mind because it doesn't cover more. Can you explain that a little bit?
I just say it's the things that go underneath of it, right? So it's the auto and the home policy that you put underneath.
But it's just more for it's more for what's already there. It's more money, but it doesn't protect in more situations. In other words, if something slips through the cracks on, you know, in the coverage, if something's not covered, it's the umbrella's not going to come along and cover it. It's just covering in terms of amounts. So that would go back to the we ran over the cardiologist scenario. That would be a good time to have had an umbrella coverage, is because our auto policy might cover $1 million, but the umbrella would give us an additional $2 million.
Exactly.
So, okay, that's cool.
Alrighty. For now, business and professional liability. So I want to share a little insurance story that I had when I was first new to insurance. I speak Korean, I'm Korean, but my Korean's very limited, like elementary school level, right? So I do speak Korean with my clients, but it's not great, and I have to ask them to slow down or explain things a little differently to me. So one day this gentleman calls and he's like, I have a business and I want to get business insurance and workers' comp for my employees, and so I'm like, great, I'd love to help you with that. What kind of business is it? And so he says a word, and I said,
is he speaking Korean at this point?
He's speaking Korean, and I'm speaking Korean to him, and I'm like, can you say that word one more time, and he says it, and I'm like, I'm so sorry, my Korean's not very good. Can you tell me what type of business it is? Like, what do you do, right? And so he goes, well, when they come to your hotel room and stuff, right? So I'm thinking, oh, like there's a lot of Korean tour companies in Las Vegas, right? So I'm like, yeah, we totally can do tours, tell me about it, like what kind of tours do you do and all of that. And he's like, no. It's where like the girls come to your room. And he wanted to get like workers' comp for them, and I'm like, I can't do that, but there's other companies. But that's an illegal operation in Las Vegas too. Maybe if you're in Pahrump, we could make that work, but it won't work here, okay? So with business and professional liability, general liability. So general liabilities, we're in this amazing space here from this company, and I trip and fall, and I'm like, I want to sue you, right? So that's their general liability. A lot of companies, they separate the general liability from the business personal property. So we're looking around at all this equipment, right? I've had clients who have businesses like this, and they're like, yeah, here, take a look at my insurance policy. And they literally just have liability. They only have liability, and all the stuff is not covered, right? So again, making sure, depends on how the company does it. Like my company, we do it all under the business insurance policy. We do it as, the building you own, the property, and the liability, but some companies just do it as liability and then add the personal property later, okay? The other thing with general liability is it also can include what I call products and manufacturer's liability. So, this water, what company is it? It's Nestle Pure Life water, right? So I am Target, and I'm selling this water, right? And so if this poisons Jameson and he sues, it's really Nestle Pure Life that's liable, right? Because they put their name on it, it's their product, right? But if I'm manufacturing this water, or I'm even white labeling it, so I take everything off, and now it's, Yuliana Chung store water, right? Then I'm assuming part of that products and that manufacturer's liability. So a lot of, I know, us white label things, so that could be an additional liability that we're taking on. Some policies don't allow for that. It depends on the company, it depends on the type of business you have. So again, making sure that if you do that or you manufacture something, that is covered under your general liability, okay? The commercial umbrella policy, it's the same thing as the personal umbrella policy, right? It's just the umbrella policy that you could put all your other coverages on, and that covers. The things that I've noticed, an error that I've seen some entrepreneurs do, is we have a lot of entities. So there's Yuliana Chung, me personally, right? And then there's Chung Insurance Agency, and then I have some other like holding companies, right? So those are all legal separate entities. A lot of us own buildings like that our business are in, but that's again in a separate entity. I've seen a lot of policies where they're put together as, so like for example, I own Chung Insurance Agency and I have UK Holdings. UK Holdings owns the building. I've insured it all as Chung Insurance Agency. If anything happens to that building, nothing is covered. Nothing is covered because the wrong entity is covered. The wrong person is covered. It'd be like me insuring Connie instead of Connie insuring me, kind of thing, right? Where the most blatant example is I have a dentist client that owns his dental practice, and he has two other businesses, and he owns about 100 real estate properties, around. And so he probably has about 20 different entities, and he had one umbrella policy, and he thought everything covered. So
Once again, that's another guy who you want to be the one to hit you in the accident. So,
so you want to make sure that your entities are covered correctly. Some companies, again, insurance people will be like, it's okay, Jameson, let me just put it under one, and I'll name both of them. I'll name Chung Insurance, and I'll name, UK Holdings, and we'll put it in one. So you could do that, but that kind of defeats and negates the purpose of why you created those entities in the first place, to separate the liability.
and let me jump in on that.
Yeah.
The risk there is that if one commits a liability, the other one could be liable, because the court's going to say, well, you weren't insuring them together, and commingling is essentially the kind of the concept there. So if you create separate entities, you want to create them separate, keep them very separate from each other, separate bank accounts, and especially separate insurance policies. Yeah.
So if you have a commercial umbrella policy and a personal one, you have to have one for every entity that you have and yourself personally. Okay. Professional liability, what the difference between that and general liability is, so general liability is if you come into my office and trip and fall and, third-party claims would be covered. Professional liability is if I told you as an insurance person the wrong information due to neglect or just that I made a mistake, right? And it harms you. That's professional liability. So in a lot of our professions, it's called errors and admissions, right? So that in Jordan's profession and in doctors, it's malpractice, right? So again, having that professional liability, even like people who are estheticians, hairdressers, nail people, they have professional liability, or they should have professional liability. The fifth one is employment practices liability policy. So that's if I have an employee. So let's say I have Cam, he works for me, and I'm like, Cam, you look so handsome today. And Cam's like, oh my God, Yuli's sexually harassing me, and I feel like objectified, right? And now he wants to sue me. So those are the things that the employment practices liability would cover. Also, wrongful terminations is part of that. And then lastly, workers' compensation. So if your employees got hurt on the job, again, making sure that they're covered. Oh, did I not? Okay, so the difference between general liability and professional liability, again, the third-party injuries, damage, and third-party reputation harm. So if I'm like, yeah, Jordan is like the worst attorney ever, that, again, don't do that because that could be purposeful, right? And so it might not be covered, but again, third party would be considered general liability. Professional liability is, again, accusations of negligence, professional mistakes, and violations of good faith. So not fraud, obviously. I'm not like stealing customers' money. That would not be covered, but if I made an error in good faith, okay?
Yeah, great. No, I appreciate that. So whereas with Yuli's area of practice, it's really about, preparing everything so that if something unexpected happens, you have sufficient money, and it's really money is the solution there. In my practice areas in estate planning, it's the same sort of thing where we're insuring, and money is involved, but it also involves the element of like, what are your wishes? And that's what estate planning deals with. And some of your wishes may have to do with money, but this one, again, going back to the crap that happens, the inevitable is that we pass away. A lot of people before they pass away experience incapacity. So those are the two things that we all have to grapple with. And estate planning is really the process of preemptively dealing with what we want to have happen when we can't. So the illustration that I always use, well, first let me tell you about misconceptions of an estate. Because before I really went to law school and understood this, I thought of like a rich old guy on his balcony looking out over his, orchards and thinking, this is my vast estate, right? So that's a misconception because people might think they only need estate planning once they achieve that level of either age or wealth. And that, of course, is a misconception. The reality is, here's the guy from the example, by the way, and who I thought, he has an estate. But that's not true. We are all actually, you can go to the next slide, an estate waiting to happen. And let me explain what I mean by that phrase. Will you pull out your phone wallet thing there and just show it to everybody?
I know, it's like, it's over the top. It's
yeah,
my phone and
there's
my
I noticed there's quite a bit going on in there, and that's pretty cool. You have a lot of stuff in there. So right now, Yuli has this phone, wallet, all-in-one type case, and it has money in there. There's credit cards in there. For the sake of the example, let's say that you have like information about prescriptions in there, house keys, car keys in there. You really have a lot going on inside that wallet phone case. And tragically, one of these big pieces of equipment, one of these speakers falls off and lands on her head. Sorry, I didn't warn you this was going to get really grim. And all of a sudden, Yuli is either incapacitated or she's passed away. And she leaves this wallet right here. And, there's a few of us in here we could just like take the contents of the wallet and divide it amongst ourselves before or after we call the ambulance, whatever. But there's something about that, I hope, that kind of offends our notions of justice. If one of us tried to take the wallet and pocket it and go home, I think the other ones of us would be like, no, that's not right, that's not yours. And that's what I mean that you're an estate waiting to happen. An estate is like your interest and your rights and your claims and your duties and obligations when you're no longer able to handle them. Right now, by all appearances, you have your capacity to handle what's in that wallet. Speaker falls on your head, boom, bursts into existence this legal concept of an estate. So estate planning then, of course, it follows is just the idea of preparing for this event when we can no longer handle our assets, our duties, our obligations, and things of that nature. Estate planning is interesting because it comes in various levels of kind of effectiveness. And the first level, the lowest level of effectiveness, is that the law actually has prepared an estate plan for you. A lot of people don't really understand this, but if you don't prepare your own estate plan, then the law prepares it for you in the form of guardianship laws and probate laws. And so guardian and probate and guardianship is basically, hey, listen, you didn't do any estate planning whatsoever. Now we need the law to say what happens in this situation, who's in charge of your stuff, how do your debts get paid, where does your stuff go? So if you don't do any estate planning, it's not ideal, but there are laws that cover you. And in some cases, it's really not ideal, because imagine that you and your partner love each other very much, but you never really liked the institution of marriage, and so you decided just to agree with each other, hey, if I die, you get everything, or if you die, I get everything. Well, that's not the way the law works if you don't do your estate planning. The law says it goes to your spouse, and if you don't have one, to your kids, and if you don't have those, then to your parents, etc. No matter what you might have agreed verbally with the person you spent the last 30 years with. So here again, you have an extreme outcome from lack of planning. It's an extreme and undesirable outcome that can fall really heavily. So that's probate and guardianship, and I could go into a lot of detail about all the pitfalls of those areas. They're expensive, they're clunky, they have to be dealt with in a courtroom, you have to hire attorneys. It engenders a lot of contention, as you can imagine. I come from a family of 8 children. I know I'm my mom and dad's favorite. I'm confident that my brothers and sisters would make the same claim if they were here. I don't think we'll fight when my parents pass away, but that's what everybody says. Those are famous last words. Anyway, the problem is if you just leave it to the state, a lot of bad, harsh outcomes can result. So there is a better, oh yeah, go ahead.
I have a question. So, when I first did my trust, it was very early on when I opened my business. We just got married, and I did it when we had our son, because we owned our own home, and I was worried about that going into probate. I mean, we didn't really have a lot of assets. We only had the little equity in our home, but that was a big concern of mine. Like, when do you recommend that people really look into that? Because I mean, really, my net worth at that time was not very much.
It's interesting, because your net worth can be really small, and there are proceedings, probate proceedings that you can use for small estates.
Yeah.
But if you have real property, then it has to pass through a probate process. And so it has to go before the probate court. There's no kind of abbreviated procedure for dealing with real property, no matter how much equity you do or don't have in it. So that actually is one of the good thresholds for when you should want to do your estate planning is, oh, I own real property, I'm an adult, I should have my estate planning done. Another one you mentioned just in the question was having children. That's a great reason to do estate planning. You have to name the guardian for your minor children. It's also kind of fun that you don't have to ask permission of that person. So, for example, you are going to be the guardian of Wesley if his mom and I pass away. And I never even told you that until just this moment. Congratulations.
Awesome.
I think he'll have a very good upbringing with you. So, but don't let him talk to all your clients who have like the prostitution, STD situations. No, but no. So those are all good life events. And even beyond that, if you don't have children and you don't have a house, you still have your own body to worry about. And estate planning, part of what we do as estate planning attorneys is say, if I become incapacitated, who makes medical decisions for me? Who determines when to pull the plug or whether or not to do this risky surgery? So literally everyone can benefit from estate planning, but certainly there are life metrics where I'm like, it's more urgent that a 24-year-old with a kid in a house over maybe a 19-year-old who's just out there, going to college or whatever. So yeah, no, I appreciate that. So the lowest level of estate planning is the law writes it for you. The next up from that is that there are non-attorney solutions in estate planning. And I'm guessing that everybody here actually has some of these in their life. A non-attorney solution is saying, I have this life insurance policy. I want Connie to be the beneficiary, so I'm going to list her. You don't have to call up an attorney to list a beneficiary on a life insurance policy. You don't have to call up an attorney to add somebody to a joint account. So I could have Cindy and Jordan jointly own an account. If I happen to pass away, then Cindy gets that account. Same thing, joint ownership on a house. These are non-attorney solutions. They come with certain drawbacks. That's why we have kind of the messy cake. Is let's say, for example, that Cindy and I agree that this money's going to go to me if she passes away. She put me on an account for $50,000. But if I go out and I run into this hypothetical cardiologist, who we're really beating up on that individual tonight, so I run into this cardiologist and the lawyers sue me, then they're going to say, hey, you're jointly on this account. And I'll say, no, that's actually Cindy's money. She just put me on there in case she passes away. The lawyers are going to be like, nope, that money, it needs to go to this claim. And then Cindy and I would probably lose our friendship over that, because this money that was actually hers, I was on that account. Same thing with life insurance policies. I got Wesley here. Right now, he doesn't have any chemical abuse issues. He doesn't have any bankruptcies. He doesn't have any divorce. You're living really, I'm really proud of you. But I might pass away when he's 27 years old, going through IRS debt collection, bankruptcy, divorce, and God forbid, but maybe when he's going through all these problems, he also has a substance abuse issue or a gambling problem. I pass away, and $200,000 of the life insurance policy just lands in his lap at the worst possible time. And so, yeah, you could do that, but that kind of unpredictability is built into these non-attorney type solutions. And there's much better ways to handle that.
Before you go into that, Jordan, you talked about the life insurance and having beneficiaries. So I've always told clients that, if you're married, your spouse basically should be the first primary beneficiary, right? And then the secondary beneficiary should be the trust, right? And
Yeah.
how you want that. Do you agree with that?
Yeah,
or
no,
what are the
absolutely. In fact, I think on the next slide is when we talk about, creating a trust here. So, so I'll just read this really quickly. You can avoid probate costs by creating a living trust. The attorney says that. Dilbert says, so I can use an inconvenient system created by lawyers to avoid a worse system created by lawyers. And that's kind of how people feel when they come into my office. And then I say something like, according to my watch, that witty observation just cost you $4. So, but yeah, it seems really complicated to people. But the reality is something has to happen in that event where the speaker falls on our head and you leave all these issues here. We didn't create that problem, but we create the solutions through either the law, these non-attorney solutions, or through legal attorney drafted type solutions. You've heard about wills and living trusts, and those are very popular instruments. On the non-attorney side, you can go to like LegalZoom and download forms. And I always tell prospective clients that if you get LegalZoom documents, that's really good, because you might be lost in the wilderness and you need to start a fire, and you can use your LegalZoom documents as kindling for your fire, and it might save your life. So other than that, now the reality is those are probably fine. They're probably better than nothing. Nevada actually recognizes what are called holographic wills, where you can just write your own handwritten will. You could do that tonight. It'd probably be better than nothing. But what attorneys do, estate planning attorneys, we just say preemptively to the world, this is what we want to have happen. This is who we want to have everything, when, under what circumstances. This is when they can't have it, if they're going through a chemical abuse situation, or if they're only 19 years old, or if they haven't completed college. So we as estate planning attorneys can, to a degree of 99%, I don't know, just made up that statistic, but that percentage, we can really dial it in so that there's taking so much unpredictability out of the process and making sure that all of your wishes are fulfilled through your estate plan. One of those things, of course, is a trust. The trust operates like a box. And so once we create that legal box, we transfer assets into it. And so the house, rather than being owned individually by Connie, would be owned by Connie's trust. And once that happens, we appoint a trustee so that in the event of Connie's passing, the trustee can come in here, sell the house, rent it out, mortgage it, whatever they want to do. That's the type of flexibility that's built into it, rather than just saying, hey, according to the probate laws, this house goes to this individual. And so that's kind of the advantage of attorney drafted estate planning, is that you can really dial it in. And then going along with the trust, this is another area where we realized our our practices overlap is that you can use a life insurance policy to fund a trust. It's cool because I can actually make sure that my trust has $1 million by getting $1 million life insurance policy on my life and naming the trust as the beneficiary. I can create a situation where no matter what else might happen with my outrageous fortune of wealth and poverty or whatever, as long as I'm paying that policy, $1 million will go into my trust at the time I pass away. I could use that to pay off a mortgage on one of the houses so it could go outright to my children or whoever. I could use that to pay off a business partner. I have a business partner and they don't want to be partners with my sons. But they want, the sons need money to buy me out from the business partner. And so that's like a buy-sell agreement. Of course, the money can be used to pay funeral expenses, administrative expenses, estate taxes. That's a different can of worms, but there's trusts that are specifically set up to pay any tax liabilities when you pass away. So there's a lot more flexibility with attorney-type drafted estate planning. So I'd encourage you to, think about that.
So with life insurance, I mean, hopefully, the two categories of life insurance are term and there's permanent. So term is like what I described, like renting. Like you sign a 10-year, 20-year, 30-year lease, and during that time, the company says, we're not going to raise the price on you, right? We're not going to cancel on you. You have that time, right? But then after your lease ends, the 10, 20, 30 years, it's like, thanks for the money. You don't have anything, right? And we're all relatively young. We hope that we live, past 10, 20, 30 years. So usually when you fund a trust, it's with permanent life insurance, right? Something that's going to build equity. So I equate it to owning a home. Part of the payment that you pay for that life insurance goes to pay for the life insurance costs, and then the other portion goes into the cash value. So life insurance can also be an asset. So there's some cash value associated with that. And one of the amazing things about life insurance also is that it's protected from liability. This is something that we talked about in the beginning. So the example that I use all the time is when O.J. Simpson was sued by the Goldman family, and they won millions against him, and he kept saying, I have no money. And then they'd be like, no, he's on the golf course all the time playing and just hanging around. It's because a lot of his monies were in annuities, which are considered a life insurance product, and it's protected from liability. So it could also be a valuable asset, and the next slide kind of shows that. So in this scenario, there's this optometrist who's retired at 65, and he had $1 million that he saved for retirement in a brokerage account. And now he's like, I need $75,000 a year on an annual basis to, support my lifestyle, and that's what I want in retirement. So every year he pulls out $75,000, and you could see the market fluctuation. So this is a hypothetical, 14-year time of market is negative 11.9%, negative 22%. The next year it's up 28.7%. Next year 10.9%. So it fluctuates, right? And if you look at that at age 79, the money's over because of those market fluctuations. In the next scenario, he's doing the same thing. He's like, I want 75,000, but in the years where the market takes a dump or it's just doing phenomenal, he goes, I'm gonna take a little bit less, and I'm going to take it from my cash value life insurance, right? So he takes 50,000 during those years and lets the other money sit in that brokerage account, earning or hopefully, getting a chance to recoup its losses. And so at the same age, at age 79, he now has $500,000 left versus not anything. So again, it can be used as a financial tool, and we have amazing, sponsors that can help you guys with that. And although I told him I would give him a shout out, but then I just found out that he's like cheating on us with another EO chapter. So I don't know.
Vegas is your favorite. Okay, no, that's good. No, they do a great job.
Yes.
So there's a lot of resources. So this is kind of again, I just wanted to close it out prior to the questions. I think we'll have questions if you guys have any, but it's really like crap happens, and we have to deal with situations where we're sitting across from people who would give any amount of money, basically, or would do anything to rewind the clock just by like 2 weeks before the liability happened, before their truck driver at their warehouse caused a huge liability, before they got hit by the 19-year-old who doesn't have any coverage whatsoever. And so the time to plan and think about these questions and sit down with the professional is now while the skies are sunny and clear. So that's basically it. So any thoughts, any other thoughts or any other questions?
I have a question. Hello? Okay,
Hey.
cool. Jordan Ibsen here, longtime listener, first time caller. I have a question for Juliana. How often should people reevaluate their insurance, whether it's personal or business? Because obviously, like you mentioned yourself, life's changed since you first had only one son and just bought a house. So what's your recommendation for how often people should call you up and get that checked out?
We say on an annual basis. So, I mean, if like major life things happen, like you have a child, you get married, the major life events, obviously at that time, that's a good time to review, but we say on an annual basis to look at it, especially your business, because in our businesses, things change so much in a year, right? So personally, maybe not so much, right? But in our businesses, it's definitely something like we might have added a new product. We might have, decided now we're going to do, we had this, but now we're going to white label this, and we want to make sure that that's going to be covered. So at least on an annual basis.
Oh dear.
I have a question for you. However you say your name, I forgot. What is your life insurance? Does it add to the assets you're giving to your kids, or does it just stay there?
It actually does add to the assets. So when we had done our financial planning at the time and done our estate planning when my son was first born, again, we had like no money. And the attorney kept saying, high net worth clients like yourself. And I'm like, finally, what are you talking about? Like we don't, I just started a new business. Like we have like very little in assets. And he was talking about the life insurance that we had. So it does add to your estate.
Yep, that's a good point.
That's a good
Yep.
question. Thank you.
I have a question. Is there a rule of thumb for how much umbrella coverage you should have? Should that be like equivalent to your net worth, or is there a formula or something?
I always say it should be equivalent to your net worth. That's my personal belief. But again, I have clients who are like, that's okay. I'm going to take that risk. So it's what's going to keep you up at night. Like for me, I want to make sure I'm protected and that I'm okay. And if, knock on wood, and it's horrible, but thank goodness I own an insurance agency because I'm not a very good driver, and so like I got to make sure like my coverages are really, really good. So that's but usually I go with rule of thumb is what is your personal net worth.
Thanks. Yeah, I was. Jordan and Brennan called that out and said, "Hey, you should increase." I thought I was all that. I had umbrella insurance. I was like, "Yeah, I'm good." Yeah, but you only had 1 million. You need to like increase it to equal, what your assets are. So I did it right away, and I didn't even. I thought 1 million was enough, but
That's
not
great.
with these hungry attorneys out here in Vegas.
Yeah.
No.
Yeah, I have a question. So you were talking about the life insurance, and life insurance passes on to their heirs tax-free, correct?
Yes.
Is there
Depending,
any
yeah.
ramifications if you name it in the trust? And, like, if it goes to the trust instead of the kids, like, do you lose that tax benefit? And two, does the life insurance have to be owned by the trust, or is the trust just the beneficiary?
So yeah, that's a great question. Generally speaking, it's okay just having the trust be the beneficiary. There might be some reasons in advanced planning to make the trust own the policy. But yeah, in terms of taxes for a trust, for a life insurance, generally there's not a huge difference between individual and having the beneficiary be a trust versus an individual. For 401k plans and stuff like that, there can be a big difference. So you'll want to talk to a CPA or tax professionals to make sure that if you have a 401k plan and you're thinking of naming a trust as a beneficiary versus an individual as a beneficiary, those can both be the right answer in certain contexts, but it's important to get good tax advice on that scenario. So
Can I add to that also? So that's personally, but if you had it for your business, so like Jordan has a partner and he might have a buy-sell agreement. I have a key employee life insurance policy, so we actually deduct that as an expense, and so that is not tax deductible. It's not tax-free. The
Yeah.
death benefit. I'm sorry. No. Yes.
right,
Mhm.
yes, good point.
Yeah. Mhm.
So you talked about E&O. So I have E&O as a consultancy, and kind of talked about pass-through entities. So we have. I was just kind of curious how this works because I've talked to another broker about it. But we have a like a billing entity, and then we have these LLCs that are subcontractors. And we've been told as long as the billing comes through the parent entity, that professional liability or errors and omissions coverage should pass through, or there's a rider to pass that through, or how can that work in those kinds of scenarios?
It depends on the carrier, and I would definitely check with them, because usually if they're subcontractors, they're saying that they should have their own. So the subcontractor should have their own E&O, and you're just covering your parent company that they're passing through. So technically, all subcontractors should have their own policies.
And then second question, a very popular policy in my world right now is cybersecurity, which is that still considered professional liability, a form of professional liability?
It would be more considered general liability, and then
Okay.
they add that on there.
Okay.
So I have a question for you, Lee. Maybe you can just explain it to me and make make me sleep a little better. We had an instance where an employee was on a customer property and stealing merchandise. We found out about it, and we called the hotel, and we turned our employee in. He was arrested, and sure enough, we found through recordings that he had been stealing items. What's my liability in that? Because we ended up paying a lot of money to the hotels just on speculation on what he might have stolen over that time period. Our insurance company paid nothing, and we paid just to maintain the account and the positive relationship that we had. But is there anything that would have covered my employee in that situation?
So some policies, that's not general liability. It's an endorsement called employee dishonesty. It's called that, and so you can add that onto your policy.
We had that on that, and
And
they
they didn't
still
cover
didn't
it?
cover it. No.
Well, then it's my question for me, because that's what we try to do sometimes is we get insurance companies to cover, and if they don't, it's called bad faith. And so we could slam them. So potentially, I don't know. We usually deal with like personal injury between individuals rather than business type liability.
Right.
But that's an interesting situation.
Especially because we
so.
turned ourselves in.
Yeah.
Right.
I mean, they wouldn't have known if I had just shut up.
Yeah. I mean, I'm not trying to diss on insurance companies at all, because they're very, very necessary, but they do make more money the less they pay out on these policies. They don't give you the money, they get to keep that money and take it home and buy boats with it. So definitely if you're in a situation where you feel like an insurance company should pay up and they're not willing to do that, that's something that signals the need to talk to an attorney. And oftentimes attorneys will take those cases on a contingency basis, so you don't have to come out of pocket vastly with vast amounts of money to get them to review that. So
Cool, thanks. I would also ask you the same question that he asked of Yuli about the timing of how often I need to look at those documents for a trust or something like that.
yeah, so for an estate plan, I say we'll happy to do a 15-minute review every 3 to 5 years just to make sure nothing's changed. But the real answer is, as often as things change, if you have, you get married, or you get a divorce, or you start a new business, or you, sell houses or buy rental properties and anything big like that. And those are usually pretty quick reviews. They don't need to be really in depth, but I encourage all of my clients just to stay in touch with me. And at a minimum once every 3 to 5 years, but for sure as often as the facts on the ground change. So yeah, I appreciate that.
That was my question. I guess the question for you also would be, what documentation would you like to have? So if somebody sets an appointment to come into your office, what would you like to have in place to go over? Like, do you want insurance policies, life insurance policies? What do you want to best prepare to have that in place? And do you do a probate, or do you do your trust, and then do you set up the estate planning, or how does it work? Or
So-
do they done?
So
coincide?
I'm used to having people come in with nothing besides just what's floating around in their minds. So that's actually totally acceptable, because I'm positioned to know that people don't often have their ducks in a row when they come in. So that's perfectly fine. Obviously, having more information, documents, and things like that, knowing where your assets are, who's listed as beneficiaries on those assets, knowing if you have like a prepaid funeral plan, you know what I mean, or that'll just help us from there. But yeah, I'll take anybody, but the more they have information about that. Address, okay, here's a good one. Who do you want to take care of you if you're incapacitated and you can't make financial decisions or medical decisions. That think about if I have clients think about that beforehand, then we can make a lot more progress more quickly. So those are the types of things you should think through. But on the other hand, I don't expect anybody to come into my office with everything figured out. So great, you guys were such a great audience. Thank you so much.
Well, thank you so
Really
much.
enjoyed this.
Hopefully, and the people on Zoom, I know, I don't know if there were any questions, but I just wanted to thank you for joining and appreciate all of you guys. Thank you.
All right.
So once again, we want to thank everybody, and again, Jordan, thank you for being an incredible sponsor. And you know, we definitely need to acknowledge AV Vegas. This establishment is absolutely incredible, and
cool.
the amazing online learning events that we have are always hosted and here at AV Vegas, and they just make us all look so phenomenal. So thank you for opening up your space and the incredible tech stuff that you guys do. Clearly, I'm not a techie person, so all your stuff that you do, you're really good at it. So thank you. You guys, thank you. Have a great